Hello, everyone out there in podcast land. Welcome back to Adventure Capital, where we not only discuss the entrepreneurial journeys and adventures with founders who have raised capital on Wefunder, but also the different resource providers and mentors helping founders along the way. Huzzah! In this interview, we chat with Chris Lustrino, founder and CEO of Kingscrowd, the Bloomberg of the private markets. Before we get on with the podcast, we're required to let everyone know that anything we say here should not be interpreted as investment advice, recommendations, or soliciting investments in any company. All companies raising on Wefunder are given an equal opportunity to participate in the podcast based on the progress of their campaign. Wefunder gang, take it away.
Hey guys, welcome to another episode of Adventure Capital. Today we're really pleased to be joined by the CEO and founder of Kingscrowd, Mr. Chris Lustrino. Chris, welcome to the podcast.
Jonny, thank you so much for having me on. I'm looking forward to this conversation here today.
Same here. I'm excited.
Yeah, and me and Katie here on the Wefunder side. Chris, I was looking at my emails, and I think the first email I got from you was March 2018, which was like a month into the job at Wefunder. So you were one of the very first conversations that I had when I joined Wefunder a little over 4 years ago now. You're, I feel like, one of the OGs in the space. You kind of caught this vision early and just really excited to chat with you about what you've learned over the years running Kingscrowd and where you see the sector going in the coming years. But maybe we could start, for those listeners that don't know, tell us, what's the high-level overview of what you guys are building at Kingscrowd?
Sure thing. First off, I remember that email, and I remember talking to you, and I even remember exactly where I was, because I hadn't even left my full-time job yet. I left on May 15th of 2018 to start Kingscrowd full-time. And so I was walking on this street in Cambridge, Massachusetts, outside of my old job, because I obviously didn't want my boss to hear, and was like walking and talking to me about this idea of Kingscrowd and what we were going to be. And I think I do remember saying to you, and I'm only giving you a hard time, I was like, I think it'd be cool to do our first round of funding on Wefunder. And you're like, I think you're a little early, because AKA was just me saying I had this idea. But anyway, here we are 4 years later.
Thank you for bringing that up, because I feel like this is going to be the thing that just haunts me through my Wefunder career. This is like, but I feel like this is my kind of street cred, it's like the VC that passed on Airbnb, it's kind of like a rite of passage.
Yeah, exactly.
Saying to you, like, I think you're too early. And then you were like, let's see about that. And then you went to raise, I think you did net capital, and you raised
that's right.
$1 million on net capital. And it's like, damn, if you can raise $1 million on net capital, you would have crushed it. I mean, you would have also raised $1 million on Wefunder, because that was the limit at the time. Yeah, man. That's probably my biggest regret of a dumb pause. So it's interesting. Wefunder, we can talk about this in this conversation. Wefunder over time is as kind of become more of an open platform, so that stupid people like Jonny can't do dumb stuff like that anymore. So if we'd had that interaction in 2022, it would have been a different outcome. But that's my biggest regret. So far at Wefunder, man.
Hey, I'll take it. That sounds like an honor to have.
It is. Yeah. You're the Brian Chesky here. And I'm whichever VCs were stupid enough to pass on everything.
Well, anyway, to provide kind of an overview of what we're about. So I'm sure a lot of your listeners are very aware of, kind of what we call the online private markets, the emergence of community rounds, so on and so forth. And we kind of sit at the center of that universe. And the whole idea behind Kingscrowd is to essentially be like a Bloomberg for retail investors who are trying to invest into all of these new alternative investment asset classes. So we track, rate, and help you diligence and manage each and every one of the investment opportunities that is out there on platforms like Wefunder, Republic, Seed Invest, Start Engine, And now, as we're working through our Series A, the long-term vision is do that across every asset class that's now trading online, be it collectibles on things like Otis and Rally Road, be it real estate on things like Fundrise and Ground Floor, so on and so forth. So we really are trying to be that one-stop shop for people to find and vet investments.
Crypto as well?
What's that?
Crypto as well?
So in our strategy, the thinking is that we start with hard assets because no one is doing hard assets. We own that space. Long term, I think there's opportunities to either partner or eventually get into the digital assets. But in the near term, over I'd say the next 12 to 15 months, our core focus will be on covering each and every hard asset that trades online.
Nice. Okay. Cool. Yeah, I remember learning at Kingscrowd as well back in 2018, and it's such a great platform for especially like early investors who are interested in coming on to one of the platforms, and maybe their favorite company is raising, but they don't actually know like what they're looking for or how to invest and how to do it intelligently. So can you, maybe provide us a little bit more detail on how you guys assess deals and what a first-time investor should be looking at when they're using a platform?
You know, it's pretty cool because never in the history of startups have we actually had access to data. I mean, this was my whole inspiration behind wanting to build this business, was that I worked on behalf of private equity clients in my first job out of school. And they would ask us to go get all this data about the business, about the market, about competitors. And it was impossible. That's why they would pay us $500,000 to do the work, because it was such a hard job to do. In this world where you have things like regulation crowdfunding and regulation A+, and frankly, just demand from retail investors to have good data, has led to this world where we have things like financials on thousands of startups that are raising capital. We have all of the terms laid out. We know exactly how much money they raise. We know who owns above a certain amount of each company. So we have all of this really rich, and by the way, qualified data, right? That sits on kind of the Edgar filing sites, where we know that what we're pulling is clean and standardized. And then what we built on top of that is we've essentially built all sorts of information around key things that you want to look at in a business. So for instance, market size, right? Every company says they're in $1 billion or $1 trillion market. It's our job to go and find sources and build out market sizes for each market growth rates, so on and so forth. And what we do is we collect about 500 data points on each and every company in a standardized format in our database that we have today. We've tracked over 5,000 companies to date since we started the company. And essentially, we kind of score them against one another on key metrics, like market size. So for instance, if you're a company with a $10 billion market and another has a $1 billion market, well, the one with the $10 billion market is going to win on that criteria, so on and so forth. So that's kind of how our ratings work. In terms of, what early investors should be thinking about, and the first thing I always say is like, get educated, learn about the key terms, make sure you understand what it is you're actually investing in, understand that it's super risky, that you should diversify, that you should probably lean towards investing in things you know rather than things that you don't know. Give yourself as many defenses as possible to make sure that you're setting yourself up for success.
Do you, are you kind of educating investors, providing resources and content to help them be better angel investors? And kind of curious about other kind of, product pillars of Kingscrowd. So obviously you have the ratings, you track the market share data, which we really appreciate. And as long as you keep showing Wefunder at the top of the leaderboard, I will keep tweeting it, Chris. So, you have kind of the ratings and companies, you have the market share data. Are you educating investors, and what are the other kind of pieces of the business?
We actually acquired a company about a year ago called crowdwise.org. Right now Brian is phenomenal. He's our VP of product now. He's the founder of Crowdwise.
He was one of the first ever guests on the podcast. Words from the Wise, Kapow. Remember that? It was like episode number 3 or something.
Oh, yeah. I do remember that. Wow.
Pretty cool. Brian Belay is a guy that I think most people in the industry do know. I first met him because he was traveling the world and blogging about his travelings of the world, because he was like a rocket scientist for a decade and then decided to travel the world with his now wife. Super cool guy. And he had started this blog and was also investing on the side. And he had put a couple bucks into Kingscrowd early on. He was one of the first people that I didn't know that had put money into Kingscrowd. I was like, this is so cool. And that's how I had originally connected with him. But he got more and more into it, and he got really up to speed on angel investing and created this whole educational course and series to get people trained on how to become smart angel investors. So you can now go to crowdwise.org. It's an entity of Kingscrowd, and you can get up to speed. It's literally like a 9 or 10 part series where you're going to learn everything you need to know. And then if you go to our Crowdopedia section on Kingscrowd, we have hundreds and hundreds of articles about every term, every definition, everything you would ever need to know about angel investing and startup investing.
That's so cool. Yeah, that's something we care a lot about at Wefunder, is like making sure that this is super accessible to all types of investors, first-time investors all the way through more seasoned people. And so we always really appreciate when there's other folks in the industry educating, speaking like a human, so everyone can understand what the heck is going on, because it is complicated. And you see, new stuff all the time. I guess so I want to dig a little bit into your founding journey before we get too far into, what Kingscrowd has built and everything. I feel like we fast forwarded from you left your job, you're on the phone with Jonny, and now Kingscrowd is amazing and you've screened 5,000 companies. So can you talk to us a little bit about what that early journey was like, how you were able to start screening these companies and like get a foothold in the market?
Yeah, basically, my first job, like I said, I was working in a management consulting firm, and we were assisting in the due diligence efforts of any private equity shop before they acquired a company. And so we would spend anywhere between 200 and 1,000 hours basically diligencing a deal. Everything from market modeling, financial modeling, management discussions, customer discussions, so on and so forth. And again, at that time, realizing just how messed up the whole process can be, and thinking, boy, there has to be a better way to do private equity investing. And that's when I stumbled upon, the Jobs Act and this new world that was emerging. That was about 2014. Started a fintech blog and basically started blogging about this industry and getting to know all the founders and CEOs of every marketplace and thing like that. And that was acquired in 2018 and was really the foundational element of building this business. So essentially, one of the founders at Napster saw that blog and said, boy, you seem to have the knowledge base and that desire to be in this market. No one's building kind of the research solution for this space. Someone needs to do that. Are you interested? And I said, funny you ask, because that's exactly what I want to do. And so that was the start of Kingscrowd back in 2018. And I will tell you, as I'm sure Jonny knows from his early days at Wefunder, it was a grind. I mean, it was hard enough to be a marketplace that wanted to, offer up these deals and kind of be this cool fintech that's making private securities accessible to the public. That's a hard enough story. Try saying you wanted to be a segment of that overall market, which everyone was looking at and was saying is tiny, right? I think in 2018, maybe $20 million in Reg CF was done. So people thought I was like dumb as dirt. Can't tell you how much I was like laughed at, scoffed at. I mean, I got a million meetings with people, but everyone left saying like, no chance in hell I'm giving you a dime. It was really tough. And I will tell you, we're both, Boston folks. You went to Northeastern, I went to Boston College. I ended up hiring like 6 or 8 interns my first summer that I was running Kingscrowd from Boston College to help me with the research, because it was literally me just writing qualitative research reports like I had done at my job as kind of the starting point for the business, and then pitching all day, researching all night. And that was my life for a while. Then I got these interns to kind of help me, but I didn't know how to train them. So that kind of went, okay, but not great. It was definitely a grind for a while. We did our first raise about 120K. Then we went on Start Engine and we raised about another 50K. But, $200,000 over a year does not get you very far. I can assure you that. And then we ended up raising $1 million in March of 2020. And that was really the catalyst for bringing in the folks that we really needed to build up this business and kind of hit that inflection point. So it certainly was a grind. I tell people all the time, I've been rejected well over 2,000 times since I started this company. It's mostly been rejection, but here we are and stronger for it.
That's amazing. I love those stories, like of, people getting rejected, like just getting back up again and just through sheer persistence, like just making it happen. A bunch of different directions we could go in. Let's circle back to the raise, or the various different raises. And I love how you've, raised through various platforms, like you run various community rounds down the years. But I'm curious, before we get to that, on lessons that you've learned. I feel like we've learned so many lessons at Wefunder over the last 4 years. And to see the kind of iterations that we've made on the model and the product is really cool. What are the big learnings for you, I guess, both about the sector and this kind of, retail alternative investing in startup sector, and for you, I guess not just startups, but other assets as well. But also like for you, kind of building Kingscrowd as a company and the product, kind of lessons you've learned about both the sector and your own company and product.
Boy, I feel like all I've done is learn for 4 years. So my head is definitely full on that front. But so I'll start with kind of from a founder standpoint and building the company. I think a big part of it early on was that just no one believed that you could rate startups, that you could identify winners early on, that data would ever solve this problem. Everyone was just so skeptical.
Everyone's just kind of like, it's all art and no science.
It's all art, no science. It's all gut. It's all about your own deal flow. And
so it's harder to replicate if it's all kind of intuition and gut, then it's
and conviction. Mm-hmm.
Yep, it's all conviction. And I just kept sitting there and being like, that's hard for me to believe, because when I look around, all I see is failure, right? 9 out of 10 startups fail. These people raise $100 million and close shop. There's been billions and billions and billions of dollars thrown at the worst ideas in the world. I mean, starting with Quibi, going to Theranos, going to Fast the other day. I mean, these were practically con artists. And we've seen this happen time and time and time again. And we've been preached to for like 3 decades now that the art of venture capital is that you fail nearly every time. And I just kept going like, well, that may be true. It does not mean that we can't do better. And it just drove me through the wall. I don't believe that for a second. And I'm sitting here and they're going, well, you can't use data in the early days. There's not enough good data. I said, but what if every data was required to share that data? What if we had standardized ways of looking at every company? And I believe that in my heart that I was right. But I would say over the past 4 years, we've started to realize that we are right. And I'm going to give you a data point on that. So we have rated nearly 3,000 companies utilizing our rating algorithm. It's all quantitative. So I think it's about 2,500. Of those 2,500 companies, only about 5% have been highly rated by Kingscrowd. And by that, I mean they have a 3.7 to 5 on our rating scale. Only 5%. Of that 5%, which is about 225 companies, 125 companies, nearly 70 of them have gone on to second rounds at least a 2.5x or an actual exit or IPO. Of the rest of the universe, not highly rated by Kingscrowd, only 10% have gone on to multiple rounds, and they are typically a 2x or less. So our rating algorithm, in fact, appears to be working. Now, that's not a guarantee of future success or anything like that, but it's starting to say to us, you know what, we might be onto something, and it could be really, really powerful.
That's really cool stuff.
So I get psyched about that. I do believe we can live in a data-driven world in the future. Not that humans get removed totally from the process. You just utilize data to better empower your decision-making before you make a final decision. Like if you looked at a company like Fast and you said, boy, they're raising it, and I'm not trying to give them a hard time, but okay, you're raising $100 million at $1 billion valuation. You only have 20K in revenue. We might have a problem. That would be an easy thing to call out. But if it's all kind of hidden behind veils, then of course you can't make good decisions. So I think that's really, really powerful. Anyway, I've just been blown away by that. In terms of the market, the other thing that I think we've seen is just, it takes time to have adoption. Like people thought, oh, this thing isn't blowing up. It's not becoming this mega market overnight. And I've been preaching for 4 years that that's actually a good thing. We've gotten our experience under us. We've built a really strong foundation. I think that's been so incredibly important to ensure that we take the right steps forward as an industry and can scale the right way, rather than kind of coming out of the gate hot and then, fizzling out because we make some major mistake. Kind of like we saw in marketplace lending, right? Where Lending Club was kind of the leader, the face, everyone was going to follow them. It was going to be this huge thing, peer-to-peer lending. And then they had the little scandal and the whole thing fell apart, and it really hasn't rebounded since. We've been fortunate that we haven't had that in this market. And so I think patience is a virtue, and it's been really important for this industry to stick with that.
Yeah, I really like that perspective. I think like our CEO, Nick, has been at this for 10 years now. And it was I think it was the 5th anniversary of the Jobs Act, 5th or 6th the other day. And yeah, it's just kind of insane to watch him and see how many times he's just kind of like butt his head against the wall with the regulations and how slow it's had to move. But it's because of his conviction and how much he's pushed through that we're still here. Wefunder is still here, continuing to kind of chart the course here. But yeah, I want to get back to Jonny's question. I'm going to steal this from you, Jonny, but because you have seen the inside of many different platforms and you're constantly assessing the different platforms just within your day-to-day work, I'm curious your perspective across each one and also how they've changed over the years.
Yeah, that's a really interesting question. It's interesting. So obviously the 5 leaders, we look at everything from a data perspective first, right? You have Wefunder is typically number 1 in Reg C. You have Start Engine, you have Republic, you have Net Capital, and you have Microventures, and Seed Invest is right there as well. So those are your kind of top 6. And frankly, the 6 of you all kind of own this space above and beyond. Everything beyond that is really kind of a long tail.
Mainvest, are you looking at Main Street stuff as well? Because I feel like Mainvest has kind of been sneaking up in terms of, they're probably often in the top 5 now.
Yeah, Mainvest has done very, very well. And we are looking at it. And actually, we will be launching our credit rating product very soon.
Oh, cool.
So essentially looking at all these rev share deals and doing a quality analysis of that rev share deal. But yeah, no, Mainvest has been really good too. Each has their kind of flair and flavor is the way that I like to look at it. Mm-hmm. I always kind of say, I've said for many years that I felt as a Wefunder was the most consumer centric. If you're looking for exciting consumer companies, I feel like Wefunder has cornered the market on that. I think Republic, if you're looking for crypto, more kind of technology type of things, you're going to find it there. Start Engine is big and just has vast quantities of deal flow. It's hit or miss, but that also is across the markets. And then, Net Capital, Seed Invest, Microventures, a little bit smaller, you're going to find a little bit less deal flow, but some people like that. I mean, I have talked to many people who will only invest on one platform. They've decided for one reason or another why they appreciate one platform over the other. Yeah, it's kind of an interesting dynamic.
That is really interesting. Do you know why they kind of say that?
I would say there's 2 or 3 pieces. One is actually just a trust and credibility element, and I do find this. Without being ageist in any way, with an older demographic, they tend to be a little more hesitant to go to places that they don't know, right? A friend sold them on one, right, and they're sticking with that one. Mm-hmm. The other reason is simplicity. People get really sick and tired of trying to remember where they have all these different investments. And then some people, prefer certain security types over another. So I know one person who will only invest in price rounds, and every round on Net Capital is a price round. So that's where they go. I know someone who will only invest in a safe. So they always go to Republic because it's all safes. Then I know people who hate safes and will never touch one. So they never go to Republic. So it really depends on the individual. Everyone, has their opinions and reasons. It probably has to do with something where they were burned in the past and they're living with that pain. But yeah, it is interesting.
You've also potentially experienced a few of these platforms. Curious.
Wait, can't hear you. Sorry, can you start over?
Yeah. Can you hear me now?
Go closer.
No?
Yeah.
Sorry. Chris, you've personally experienced a number of these platforms now, and you've been very successful in raising millions of dollars. Putting your money where your mouth is. Tell us about your experiences and how you succeeded. It sounds like you had a lot of what you're saying earlier, kind of 2,000 rejections. So you were kind of pitching investors, I guess, over coffee or over Zoom. How have you, run these campaigns?
Yeah, I've pitched pretty incessantly for about 4 years now. We've raised $6.6 million to date, which is a lot of money. Mm-hmm. And I say that because we've done nearly every dime of that via marketplace, be it Net Capital, Start Engine, Republic. Certainly can't speak to the future, but would love to do it on some other platforms, maybe one that starts with a W. But we're huge believers. We're certainly huge believers.
Finally undoing my mistakes of 2018.
But no, we're huge believers of raising capital from this market. And if we're not going to do it, who is, right? We truly do believe in what we're helping to build. And so we've grinded it out. And trust me, I have lost checks on the fact that I didn't want to accept a dime offline. which is an interesting experience that literally, even though it was the exact same deal, they'd be getting the exact same terms, the idea of going through an online portal made them say no. And that's always bothered me, but I've stayed the course just to make a point more than anything, and to show that this is possible. And, along the way, we've picked up several venture capitalists that have joined at firms where the VC firm wouldn't invest. A lot of times the partners have invested. So we've been able to build up a coalition of people who really love what we do. I will tell you, early on, it was hand-to-hand combat. And then I was trying to get repeat customers. And by that, I mean, I try and get people to put in 1 to 5K. And literally, I would just LinkedIn and message people and walk around Boston for about 2 years. I did that and met every angel you could think of. And then I'd get them to give me a little bit of money. And then I'd show progress and get them to give me more money. And then little by little, first off, we kind of built up a larger base of investors. We started to build up a customer base. We've gotten to know all of the players that play in this space, be it things like Angels and Entrepreneur and that kind of stuff. And so we've really leveraged every person who plays in this space in one way or another, gotten to know all the investors who like to be in this market. And then we've figured out our messaging as well. So it's been a lot of kind of blocking and tackling and then figuring out what processes work. And you can imagine after our first second net capital raise, where we raised about $1 million, we had almost 2,000 investors. And many of those have become repeat investors in future rounds. So it starts to snowball over time, especially as you show progress.
Totally. Yeah. And it makes so much sense for you guys, like having the same user base as people who are typically on these platforms and are looking to be educated more in this. So there's just such a beautiful overlap, I think.
Very meta.
Yeah, exactly. I think this is an interesting lead in. One of the ways that the industry has changed a ton is with the investment limits increasing and also the introduction of SPVs and people just generally getting more comfortable. We've started to attract a lot of larger companies with larger communities who have different incentives. It's not just launching a campaign to raise capital. It's also a tool to build community. And really build your brand and become one with your fans and your community. And I think that's a lot of the reason we were talking at the beginning that Wefunder just launched communityround.com as a bit of a pivot, a bit of a rebrand away from equity crowdfunding. It's still a community round is sort of operating under the same legislation, but it really helps to better articulate why you use this type of fundraising. And I think your experience is a beautiful example. I'm curious, from where you sit in the industry, your bird's eye view, what do you think about this community round branding?
We've run away from equity crowdfunding for a long time because for whatever reason, and I still don't fully know the reason, but it just has had a bad connotation. I think people saw it launch and it wasn't mega overnight, and thus they wrote it off as like this rinky-dink thing. Certainly that wasn't the reality, but that's how people think of it. And I do think that the venture capitalist community did contribute to that and kind of like, well, if we turn a blind eye to it and act like it doesn't exist, maybe it'll just go away. And we certainly haven't let that happen, which I think is great because frankly, I think it's a better way of doing venture. And I think we've all seen that. But it's interesting, Web3 comes along and everyone's talking about community capital and this idea of everyone owning the internet and all of this stuff. And it's like, we've been preaching this since 2012. We've been at this for a decade. Web3 is nothing new. It's just a different rebrand of what it is we've all been up to. And I think Community Round is just a perfect way of situating it. I mean, I will tell you, we have nearly 4,000 investors. I would bet you that well over 50% of them are subscribed to our business at this point. So yeah, it's a phenomenal thing to do. It's a great way to connect with your community. And the reality is, above all else, my feeling is, capital is a commodity. And if you have better access to a broader pool of capital that never existed before, you should go after that. And if we want our communities and our innovations to look more like our communities, then we need to change the LP base from the bottom up. And the only way you really do that is by completely altering how we do things today. Going to institutions is not the answer. VCs have been trying to make venture capital more demographically friendly and investing more females and minorities for a decade, and they've yet to change anything. So I look at the numbers in that world, and 2% of funding is still going to female and minority founders. In this world, it was almost 30% of funding last year. We've 10, 15x the results. in a few years' time of launching this market because the LP base is the community. Thus, our innovations will look more like all of us in our community. So I think it's a super powerful thing and so necessary.
I love that. You mentioned something just then, a better way to do venture capital. I mean, is that, when you say that, are you talking about like, because, there's millions of investors here with capital, so it's easier to raise, or because, the people writing the checks are maybe kind of more diverse than...
Jonny, sorry, it's not coming through.
Really?
It was like popping in and out, but
So weird. Maybe it's bad
that just went out fully.
Wi-Fi. Can you hear me now? Why don't you take it?
Okay. Well, we can cut this out. I think it's honestly like when you're moving forward and back, it like.
Really? What is now?
Yeah, that's
good. That's
good. Just stay right there.
Okay.
Cool. Don't move.
So I was gonna ask that question.
You can't turn your face. It has to face the microphone.
Really? That's so okay. Now it's good?
Yeah.
Yeah.
Oh, look out the corner of my eye. Chris, what do you see the future holding for community rounds?
The future community rounds. It'll be really interesting. I know we were talking before this show. We're talking about, SpaceX, right? And this idea that there are so many people that would love to be a part of SpaceX. And if they could upvote and show how much they love SpaceX, talk about an opportunity to connect with that company and get them excited and say, wait a second, if we come over here and turn on a round, we could raise $100 million tomorrow. Yeah, I think we'll do that. It lets people show, it turns the model where the company has to decide, do we think there's enough demand for our business to really raise capital to drive our business forward versus, hey, whoa, that's really cool. There is a ton of money in demand to drive our business forward from our own community. We should engage that. So I think it'll just catch the eye. Money talks, right? Money talks above all else. This is essentially a way of indicating money to a company. If you tell me that I could go to my Kingscrowd page, if we didn't have an offering right now, and it says that I could raise $4 million from our fans and customers, you can bet that I'm getting a round ready to go as soon as possible. So I think we're going to see a ton of companies like Mercury Bank did last year that have raised mega monstrous rounds from venture capitalists and decide to engage their community as well. And I think there are companies that have no idea this still exists or aren't paying attention to it that suddenly are going to turn and say, wait a second, maybe we should be doing something here. It could end up becoming a real differentiator for a business.
Mm-hmm. Totally. Yeah, I don't think this made it in the recording initially, but one of our engineers is in a cardboard homemade spaceship around Berkeley campus right now, getting students to upvote that they would invest in SpaceX. So that's what the future of community rounds looks like, is look out for Olivia in a spaceship costume. But cool. Okay. So yeah, you mentioned, you guys are raising, you've told us a lot about about Kingscrowd, and how much value it's adding to people in the industry, who just want to learn more about different investments. So where can people go to sign up and learn more, become a subscriber of Kingscrowd?
Sure. Yeah. So you go to kingscrowd.com, and we really provide two things at Kingscrowd. So we have our core tools, which we say allow you to search, diligence, and manage your startup investment portfolio. So you're going to be able to find the investments you want, do your diligence on them. And then once you invest, we have a portfolio tool that helps you track all of them in one place and actually watch performance of those companies over time, which is coming in about another few weeks here. And then if you're someone who doesn't have time, right? You're like, I love startups, I think it's great, but I just don't have the time to build my own portfolio. We recently launched something called Kingscrowd Capital, where we're essentially creating our first debut fund, which will allow you to write one check if you're an accredited investor today, and get access to 100 companies that are highly rated by Kingscrowd.
That's super cool. Awesome. Great. So yeah, we'll wrap it up with our favorite question, which we ask everyone who comes on the podcast, with sort of your knowledge both as a founder and in the space, getting to assess thousands of other companies and other founders. What is your best piece of advice for a founder building a startup?
For a founder building a startup, you genuinely have to care about that thing you're working on more than anything in the world. This has been my best way to explain the startup experience as a founder is I wouldn't wish this experience on my worst enemy, but I wish my best friend could experience it, because you have the highest highs and just the most dramatically low lows running a business, especially as a first-time founder. I mean, it has been the hardest 4 years of my life. Not that I had a hard life, and I've been, but the reality is this is a really, really hard thing to do. And to get up every day and to be told no from potential employees, from potential investors, from potential customers, everyone is telling you no, 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 no. And you have to find a reason to get up in the morning and still want to do that thing. While, by the way, probably not making very much money. It is an incredibly large challenge. So I just urge you, if you're going to take the time to go after something you really care about, because that's the only thing that's going to keep you in the game.
I love that. Awesome. Well, Chris Lustrino, Kingscrowd, thank you so much for your time. I really enjoyed this conversation. Wish you the best of luck with everything. Jonny Jonny agrees. Technical.
I do agree. Yeah, Chris, it's been awesome. Thanks so much for joining us.
Thank you, Jonny. Thank you, Katie. It's absolute pleasure, and obviously love Wefunder. I'm looking forward to watching both of our boats continue to rise here.
Awesome.
Love it. Thanks, man. Bye.
Thank you.
Thank you for tuning into another episode of Adventure Capital. I hope you laughed, took notes, shed a tear, and most importantly, feel ready to go off on your own adventure. And remember, whenever you're ready, Wefunder's here to help. Be sure to like and leave a review, gang.